Stuck in the maze of car payments, wondering how to finally escape and own your vehicle outright? You're not alone. Many of us navigate the winding roads of auto loans, and one question often steers us: how exactly does an Ally Auto payoff work? It's a fantastic question, and one that, when answered, unlocks a powerful sense of financial freedom. For years, Ally Financial has been a major player in the auto loan landscape, helping countless individuals finance their dream cars. But what happens when that dream shifts from monthly payments to outright ownership? How do you cross the finish line and get that coveted title in your hand? Today, we're going to pull back the curtain on the Ally Auto payoff process. We'll demystify everything from understanding your payoff quote to making that final payment, ensuring you have all the knowledge you need to confidently settle your loan. So, buckle up, because by the end of this, you'll be a pro at navigating your Ally Auto payoff. Understanding your Ally Auto loan, a quick refresher. Before we dive into the nitty-gritty of payoffs, let's briefly touch upon what an auto loan with Ally entails. When you finance a vehicle through Ally, you enter into a contract where you borrow a certain amount of money to purchase the car. In return, you agree to repay that amount, plus interest, over a set period, typically in monthly installments. Each monthly payment you make is usually split into two parts: a portion that goes towards reducing your principal balance, the original amount you borrowed, and a portion that covers the interest charged by Ally for lending you the money. In the early stages of your loan, a larger percentage of your payment often goes towards interest, while as you get closer to the end, more of it goes towards the principal. This is a crucial concept to grasp because your payoff amount is directly tied to your remaining principal balance, plus any accrued interest and fees. Why pay off your Ally Auto loan early? You might be thinking, why should I bother paying off my loan early when I've already committed to monthly payments? That's a valid thought, but there are several compelling reasons why an early payoff can be a smart financial move. Firstly, and perhaps most importantly, you save money on interest. Remember how a portion of each payment goes to interest? By paying off your loan sooner, you eliminate the future interest charges that would have accumulated over the remaining term of your loan. This can translate into significant savings, putting more money back in your pocket. Secondly, an early payoff provides you with complete ownership of your vehicle. The car's title, which is usually held by Ally as the lien holder, will be released to you. This gives you full control and flexibility. You can sell the car without involving the lender, use it as collateral for other loans, though typically not recommended, or simply enjoy the peace of mind that comes with owning an asset free and clear. Thirdly, it frees up your monthly cash flow. Imagine no longer having that car payment obligation each month. That extra money can be reallocated to other financial goals, whether it's building an emergency fund, investing, paying down other high-interest debt, or even saving for a down payment on a home. Finally, it can positively impact your debt-to-income ratio. A lower debt-to-income ratio is generally viewed favorably by lenders if you plan on applying for other loans in the future, such as a mortgage. It demonstrates your ability to manage debt responsibly. The heart of the matter, the payoff quote. So, you've decided an early payoff is for you. The very first step, and the most critical one, is obtaining an Ally Auto payoff quote. You cannot simply send them your remaining principal balance from your last statement and expect that to be the final word. Why? Because interest accrues daily. A payoff quote is a specific amount, valid for a limited time, that represents the total amount you need to pay to fully satisfy your loan on a particular date. It includes your remaining principal balance, any accrued and unpaid interest up to the good until date, and potentially any fees, though Ally is generally transparent about these. How to get your Ally Auto payoff quote? There are a few convenient ways to get your payoff quote from Ally. Online through your Ally Auto account. This is often the quickest and easiest method. If you have an online account with Ally Auto, simply log in. Navigate to your loan details, and there should be an option to view or request a payoff quote. You'll typically be able to generate one that's valid for a certain number of days, e.g., 7 to 10 days. Make sure to note the good until date very carefully. By phone, you can call Ally Auto's customer service directly. Have your account number ready, and explain that you'd like a payoff quote for your loan. A representative will be able to provide you with the exact amount and the good until date. This can be helpful if you have any specific questions about the quote. Through mail, less common for payoffs while less common for immediate payoffs, you could potentially request a payoff quote via mail. However, given the time-sensitive nature of payoff amounts due to daily interest accrual, this isn't recommended for an actual payoff. Key things to pay attention to on your payoff quote. Payoff amount, this is the magic number. It's the total you need to send. Good until date, this is absolutely crucial. The quote is only valid until this date. If your payment isn't received and processed by Ally on or before this date, the payoff amount will change, and you'll owe more due to additional accrued interest. You'll then need a new quote. Per diem interest, this is the amount of interest that accrues on your loan each day. This figure is important because if you miss the good until date, you can calculate the additional interest you'll owe. For example, if your per diem interest is $5 and you're 2 days past the good until date, you'll owe an additional $10. Making your Ally Auto payoff payment. Once you have your accurate payoff quote and you're ready to make the final payment, you have several options. The goal here is to ensure the payment reaches Ally and is processed before or on the good until date. Payment methods for your Ally Auto payoff. Electronic funds transfer, EFT, from your bank account. This is often the preferred method for large sums due to its speed and traceability. You can usually initiate an ACH transfer from your bank account to Ally. You'll need Ally's routing number and your account number, often found on your statements or by asking customer service. Confirm with your bank any daily transfer limits and processing times. Some banks may have a limit on how much you can transfer electronically in one day, which could be an issue for a large payoff. Wire transfer. For the fastest and most secure transfer of a large sum, a wire transfer is an excellent option. Wire transfers are typically processed within hours. You'll need Ally's wire transfer instructions, which you can obtain from their customer service. Be aware that wire transfers usually incur a fee from your bank. Ensure you have the correct routing and account numbers for Ally. With that said, thanks for watching and until next time.